Governor Kganyago, great to speak to you. Thanks for joining us on Bloomberg. You've said that you can do more with interest rates. Do you see that you might need to do more with interest rates as the South African economy seeks to recover?
Well, it's difficult to say at the moment. Suffice to say that we had built buffers as the monetary authority. Inflation is not an immediate concern. As a matter of fact, inflation is not a problem for the next 12 months. We had always aimed to anchor inflation at 4.5%, which is the midpoint of our inflation target range. And we expect that this year, inflation will average 3.6%. So that gives us some monetary policy space. But what we have seen is that since the beginning of the year, we have provided monetary relief of 275 basis points. But that 275 basis points couldn't be felt because the economy was under lockdown. So as the economy reopens, we are then going to have to reassess, look at the evidence that is coming to see what the impact of that monetary policy relief is. And should it be necessary, we stand ready to deploy any of our tools in accordance with our mandate to provide relief to the South African economy.
And Governor, when do you think then that the economy will benefit fully from the 275 basis points of easing that you've already done year to date?
Well, this is not a full opening of the economy. As the government had spelled out, it is taking a risk-based approach. And we are almost making policy in the dark because there is a lot of data that we can't have because the statistical agency was also under lockdown. And as a matter of course, they had even postponed the release of some of the key indicators, including the gross domestic product, including the consumer price inflation. And as the economy opens up, we would have to assess. We do have a meeting of the Monetary Policy Committee scheduled in July. And hopefully by the time we get there, we would be having enough data that will enable us to assess what other policy adjustments we would have to make.
Okay, and when it comes to the role that the central bank is playing at the moment, Governor, we have seen reports over the weekend from the ANC suggesting that some parts of the ANC plan to expand the role of the central bank to involve the central bank in financing infrastructure and funding the development of finance institutions, the DFIs. Are you aware of an expanded role for the central bank in those areas?
As a matter of policy, we do not respond to political parties. The mandate of the Reserve Bank is enshrined in the Constitution of the Republic of South Africa, and it is spelled out as price stability in the interest of balanced and sustainable growth in the Republic. And we believe that we have taken steps during this period to provide relief to the South African economy, using the tools at our disposals in line with our mandate. I think that it is actually important that as the discourse about the role of central banks takes place around the world, and South Africa is no exception, that central bankers are seized with the engagement, but we need to be very clear. There are limits to what central banks can do. They are institutions designed with a particular responsibility in society, and then it is important that central banks, which are institutions that make decisions about lending and borrowing, be allowed to stay in that space, and that central banks are not dragged into spending decisions. Spending decisions are decisions of the public representatives, and central banks, it's very important that they stay in their lane in accordance with their mandate. And there is no doubt this discourse is taking place around the world, and many central banks are engaged with these discussions. But I think that it would be wrong to drag central banks into making spending decisions because they are run by technocrats and not by public representatives.